It's currently the 22 of April and it's now week 4. And as you can see, I'm on the replay mode because I'm going to make the recap for the April week 2 because these are completely wrong. These titles are wrong and I need to change those because this is week 1, week 4, no week 3, week 4 and week 1. And because I didn't change those, it's showing that it's week 4, but it's not week 4. So I'll be doing a quick cut, and I'll be coming with the videos correctly. So I changed those really fast, and now we can see that my last video was 13 days ago, which is basically 2 weeks ago. So I'll be doing the recap for the week 2 of April, which was the best week because it's not week 4. The past week was week 3, and then we had week 2, and I'm going to review it because I'm being procrastinating and not doing what I should and not doing the things that I should be doing. But now um yeah, it's just that point, that not the breaking point, but that point that you reach where you just have to do those things, even if you don't find enjoyment doing those. Because to be completely honest, I don't find enjoyment in doing this, but it needs to be done, and I need to make these tasks so then I can trade. Because if I don't do this, then my trading isn't that good. I think so, and everything gets delayed, and on the everything gets like very delayed and very bad in terms of schedule. So I'm going to do a quick review. I'm not going to bug you around and overcomplicate things because I still have to do other things. But I will do a quick review of the week 2, which was the current eye of the day. I have the month. I think that I'll be also not using replay. I'll be showing actually the week 3 right here, and now week 4 starting on Monday with no problems because we all fail. And winning is about getting up when you fall, and I fall, and I had one almost 3 weeks, I think, 2 to 3 weeks of just procrastinating. Not procrastinating because I played the guitar and do other things outside of the charts, right? But I didn't even touch nothing, just completely lazy. So I'll be doing something not quick and easy, but quick and to the point. So I can get this task done, get to the next one, and that will be it. So going back into the past, going to replay, we can see that this is currently candlestick of the month because since the opening right here, we are now here. And I think I mentioned it a lot. I think past recordings I mentioned that I was looking for lower prices. So I thought I was looking at the week 1 eye, meaning that I was looking for the week 1 eye of the month, followed by lower prices. And instead we had a turtle soup of this week 1, making this week 2 eye before going lower, right? That's what we can see. Why did that happen? Why was that important? Why basically that with the week 1 was not the eye of the day, eye of the month, sorry. I'm going to explain my point of why. Maybe time explaining, basically responding to how that happened, why wasn't the week 1 I made on the past week 1 with that Thursday eye. If I'm not wrong, it was a Thursday on week 1 that made that eye of the week, and I was mentioning and expecting that eye of the week to be the eye of the month, but that did not happen. And then we had the week 2 making the eye of the month on Tuesday before the lower prices for the month targeting this draw on liquidity. So everything that's here, it's delayed, but it's not wrong. What I mean by that is that I foreshadowed this and I explained this step by step in previous recordings in my notes. I've been bearish since all time because I was looking at this GU range low. So since this happened, I was always bearish to and expecting price to trade there. Did I catch the moves? No. I think I made also a trade on that on the week on that week 2, if I'm not wrong. Week 3, which was the best week for the current time, I didn't trade because of lack of discipline and everything like that. But yeah, I had a trade on which was this one. I still have to read this trade because I did not read it yet. But it was a loss on GBP USD because I tried to be greedy trading GBP USD. But going to the main event, I'm going to do like I always do. First thing, looking at the Forex replay, Forex Factory, and what do we have? We have Monday and Tuesday with no news, and then followed by Wednesday, Thursday, and Friday. So this immediately rings the bell to me that the second weekly candlestick, the second half of the weekly candlestick is going to be is going to move a lot, meaning that possibly there's an opportunity for the first two for the first half of the week to manipulate, and then for the second half to distribute and to use these all of these news as a form of movement, right? Because news only can do two things. So we have a new event, right? We have news. How can we have news, right? News events mainly red, and they can do only two things. They either manipulate, and which is a Judas. So you will see this many times on CPI, where before CPI or even CPI price trades higher before going lower. So they either manipulate and create a Judas swings, or they expand, expand from current price action. And I'm going to study that on this week. So this is a main important topic about this news, which is they either manipulate, so they either create a Judas swing. So both are expansions, right? If we look at things, how I see how does ICT say it? Like not algorithmic, but it's technically. If you look at things technically, and if I grab here the correct tool, we have a path, right? So accumulation births expansion, right? We have accumulation. Then there's an expansion. So this expansion sometimes is either a reversal, right? Or is either a retracement to then continue lower. So both of these are expansions, right? So which creates only one point, which is expansion. News are always expansion, especially red event news are always expansion. Always, 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 always. It's always expansion. We expect an inception of liquidity, an expansion of movement, an expansion of orders to like move the market, right? And then we have to categorize that expansion, right? So we have accumulation, whatever, and we have an expansion. And we have to think of time and price and categorize and basically give that expansion like a subcategory, like on Notion where you give a label in some sense. Is either a real expansion, like a breakout, to then retrace and continue on the upside, or is either a false breakout to either reverse and go on the opposite direction. So news are always expansion, always expansion. Is always movement. Is always something to do with energy, right? So that's first thing. Red news events are always movement. Expect that. So you either are expecting those news to create a fake move to some place to then do whatever, or you are either expecting those news to expand and to be the energy based on previous price action. So it's easy to explain. What will that be, right? Imagine that we have a previous past expression on price action, right? We are expanded, and instead of this expression with the manipulation, we are now here, right? Uh, Price is likely to trade higher. Your drawn liquidity has not been it yet, and price is currently like before CPI. It's accumulating. It's taking this low. Right, we are right here. What is more likely to do? It's more likely to trade higher because everything is indicating higher prices. But the news are only going to be an injection, like I see as a word for this, like not a fulcrum point, but another word that he mentions. But that's the whole thing about news. It's always expression. You just have to categorize that expression. Is either the expression going to be the manipulation after an accumulation to then go on the opposite direction, or it's either going to be the distribution, right? And the manipulation phase and the Judas swing was already made before the news events hit. So then price is going to follow the current price, the past and current price action. So imagine that before CPI we have like price taking an eye and now right here consolidated. Then they're more likely, to go lower. If the drone could be lower, if there's a key level lower to be traded to, if time and everything matches. So this is the first point, which are the news. I'm going to open the weekly candle text TXT on the on text. What can I see? I can see that first. Is it going to move? I was going to say it's quiet. It's going to move easily. Where? More likely on the second half of the week, meaning that the first half is going to be used as manipulation. So so before going to this and before explaining, let's first read what I was expecting. I can I could possibly expect nothing. I don't know. Let's see what I was expecting. So April week 2 from 8 to 12. For the 8th to 12th, I impact news. So already the I impact I movement weekly candlestick. News event for this week. Monday and Tuesday no news. Wednesday 8:30 CPI USD and 14 red news, so 2 p.m. Thursday 8:15 and 8:45 EU red news and 8:30 and 13:01 red news. Friday 2 a.m. GU red news and 10 Westy red news. Game plan for this week. I'm late on the week. It's currently Tuesday, 15:50 in Portugal, 10:50 in AST, which is Eastern Standard Time. Based on these based on this news, price is more likely to move a lot. But remembering the previous week expansion, now looking for a reversal or retracement continuation. So that's the all I'm going to explain this point. So I'm going to put here something in my notebook to remember to explain this because this point is important to explain because it is the old what I mentioned right here. Based on this news, price is likely to move a lot. But remembering the previous week expansion, now looking for a reversal or retracement slash with continuation. This is the old 2022 model right here. But Wednesday, Thursday, and Friday. But because it's CPI, then Thursday and Friday. So I'm here telling you to ignore CPI, which I think I didn't did or I did. No, this is the all. No, yes, I did. I ignored it and didn't trade the CPI. So then I can see higher and lower prices, especially with GU at equilibrium of the range. What do I mean by that? Is that price on week 2 was currently at equilibrium of this range. This was basically the week 2, as we can see, from the 8th to 12th, 11, 12, 12, sorry, from 8th to 12th, we can see the current, right? The, that that those questions, those thoughts about, okay, possibly I can be wrong, but the whole idea was this range defined right here, and then I'm going to go a little bit on it as as an example, as the point that I mentioned above on the based on this news, price more likely to price might likely to move a lot, blah, blah, blah. That thing that I mentioned, whether I was looking for reversal or retracement continuation, that's a 2022 model, and I'm going to explain it a lot better. I would say the discount of week one is a good place to look at coupled with the low. So retracement, I'm looking at the week one discount. Reversal, I would be looking at week one low or lower. I'm not sure what to expect on this week too, and that's nothing wrong. So first thing, I'm already late. It's Tuesday, 10:15 EST time, so I'm already late on the week. So the usual Sunday analysis I've been liking, and I'm being honest with you, and that is followed then by being completely off for this week. Then trading on the Wednesday, being a loss, which is which is reasonable. So first point I think take away from this video is the news. So if you didn't listen, go back on time and listen to it. So then I have to do this weekly recap on my notebook, but now going to the week and doing the rest of the notes, going to explain what I mean by the 2022 model on. I could explain on Geo because there's already this range, but I'm going to explain that range. The 22 model is basically a range, right? And I'm going to explain you what I mean by range. So, and I was mentioning that range as the weak one, right here. The first thing is that the 2022 model is based on accumulation, right? You have a accumulation. Then there's an expansion. And you want to engage after an expansion. You can also engage on the before an expansion, so you can engage in the birth or in the creation of this expansion by this accumulation low or this expansion low. But the 2022 model is everything based on engaging after the expansion. And then if expecting a retracement, you can like sell this retracement to then buy it back again. Or if expecting a reversal, you want to sell the expansion as an order block, right? Because after this is usually a big up close candle, right? Followed by a candle lower, creating another order block where price then retraces as a breaker and then goes lower. That's the whole idea of the 2022 model. And I'm going to explain it simple while doing the week 2 analysis on EO. So this is the current range, right? But how would I be able to define this week 1 I as a possible range I for a reversal and not as a week 1 I to be the eye of the month and to be respected? What do I mean by that? How could I know that this I was going to be turtle soup and then reversed and but not retraced, respected as week 1 as the eye of the month for April and then trade lower? I can't give you the clear answer, but what do I think is that is in the monthly chart. What can I see in the monthly chart? I can see a clear order block, bearish order block, right? We had an up close candle, right? We have an expansion move right here. We had an expansion move, 3 up close candles. What does that create? A future order block, a possible future bearish order block, right? Also, we can see that price traded into a discount. So if I shorted this R right here, I'll be looking at this as that retracement 2022 model trading to this low. And then if the retracement isn't the option and it's the reversal at this high, it will then go into this October 2023 low. But focusing on the I have on the monthly power of three, monthly open, high, low, close, whatever. We can see that on December it's followed by January closing below this December opening price, which for me indicates that there is a change instead of delivery. Price is definitely bearish and it's likely to trade lower. And we can see that by the bodies being then small bodies, but the wicks doing the damage, trading into a premium of the current month, current year, right? Because this is the first month of the year. and price rejecting it. So the first thing that I can see that it's to the tick, it's basically the eye of the month. The week 2 I made on this on EURUSD on week 2. We can see clearly that it was at on point with the order block mentioned with December opening price on the monthly chart, right? This is the same. I'm going to make it dotted so you can see the difference, but it's the same line, and we can see that price perfectly reached into it before going lower, right? So this could be the idea of, you know, yeah. Uh, this sometimes happens where you are actually 199% perfect, and you knew beforehand that week 1 was going to be taken to make the week 2 high of the month. So this could be a possibility. But let's then go to the 2 week. What do we have on the 2 week? We have a fair value gap which has been respected a lot, disrespected a lot, consolidated on it, so showing that it's not likely to be moved. But we also have this order block, right here, and then so expansion reversal, expansion. Now at this point as a protection, pro, pro fuck, how does it say it? I didn't do this in 2 to 3 weeks. Now I'm getting rusty, but protection. I think it's that, or retracement, creating this proportion block, and then proportion block opening price only turtle soups do. But on the week 2, there's nothing that clear, right? But on the weekly chart, we have this another order block, right? On that same key levels that I've been mentioning, right? This week 2, monthly, 2 week, right? Weekly now with the fair value gap and another proportion block, right? If you view it as the same, 3 up close candles, which create that monthly or 2 week possible, but most of the time monthly order block, followed by being closed below the order block viewed on the monthly order block viewed on the weekly chart. Fair value gap, another order block right here as a proportion block, right? And then price traded lower with the CPI movement. I don't know that it's CPI because I already, right, I saw it being paid out also price trading there. So I'm just, you know, I'm going to get to it because it's getting a little bit long. So that's basically it, right? It's basically those you could. I'm not saying that you could be lucky, but you could know beforehand that week 1 I was going to be taken and not respected and not respected. But imagine that you didn't knew and you shorted this after this turtle soup of the week 3 or 4 of the week 4 on this was week 4 on March. So this March week 4 I was taken into this order block, right? Turtle soup. Let's imagine that we shorted this eye, right? So now going a little bit lower. So we shorted this eye after trading to this fair value gap. We had our stop loss possibly right here. Let's say so. Target at this low. Price moved in your direction, and then we put stop loss at break even, right? What would you do after it? So let's imagine, right? Okay, that's it's fine. We enter. Price moved 1% in our direction, basically. Yeah, basically. You are we are at half of the trade, so there's only one half resting. I'm expecting now the week 2 of April to open and then to immediately maybe turtle soup this Friday eye or do something right here and then trade lower. First thing is this big up close candle into this big up close candle. So if this was going to be the eye of the month, so if this week 1 eye was the eye of the month, this order block should be respected. Price, as you can see, respected it, expanded lower on Friday, and this was my my winning trade of the month. And right after it, we should after this big bullish candlestick, price should have traded lower, right here. We should have traded lower, retest this as a proportional block, then continue on downside. That should be the whole movement. But what do we got? We got price closing inside of this order block. So after price close inside of our order block, expect the order block high or low to be taken. So if it's a bearish order block, expect the order block high to be taken. If it's a bullish order block and order block has been closed below, expect the order block low to be taken. So the candle low to be taken. That's the whole thing. And we can see that Monday price accumulating, Tuesday also price manipulating, expanding, coupled with Tuesday expansion, making the high of the day, then trade lower with the CPI movement. And I'm going now to go deeper into it. But if you had the trade open with a clean stop loss, aware of the potential turtle soup, then you will be fine. And there will be nothing that will make you scared in some sense. So I think that I answered some questions. Now I'm going to do the clean analysis. So we can see the week one used as a range high slash key level for a reversal with everything mentioned before. We can also see that we had Monday and Tuesday to create the Judas swing of the week, right? This was the Judas swing of the week, and this was the premium week of the candlestick. From Monday open to Tuesday high, we had the premium week of the candlestick. If I go into the weekly chart, you can see the premium week of the candlestick being made. If you want to mention this as the whole dealing slash manipulation range, we can say that from Monday low to Tuesday high, that was the manipulation. And I know that after a manipulation ends, it's the birth of an expansion. So after this turtle soup was done, after this manipulation low to manipulation starting point to manipulation ending point, I know that if it's indeed a manipulation and not an expansion, then this originates the starting of the reversal move, and that's where we got. After this expansion comes reversal, and we have the reversal on downside. Now, where a safe place to exit? First, first thing, it's a safe place to exit at 50% of the range. Why? Because that's 2022 model. So you want to look at something below 50% of this range, and what we have this low. So this will be a partial one. This low right here is a low time, it's an internal range liquidity, and it should be a target. Because if you're wrong, and if indeed the monthly open that I talked the week one, the bias that I mentioned for all these days, everything that I mentioned from the past, and if you're wrong, and indeed your higher prices are going to continue, you mentioned that the price was going to visit these highs, right? It's a possibility. It could have traded high into these highs. Then it's only going to do that after it reaches a discount. So a big down close into discount, and then there was a possibility for price to now trade on the upside from here. So that's why on a discount you want always to take a partial, because if you're wrong, and if indeed this is not a reversal but it's a retracement, to then be the birth of a retracement and re-expansion start to now re-expansion end. So you need to be careful on those. That's why so many times ranges do not work, because after going to discount, price then goes into your stop loss, and instead of expecting that range high to range low, it was indeed range high into internal range low, into a short-term low, or into a short-term low inside of that range, discount, and then price will expand on the upside. But Monday and Tuesday, as the Judas swing, followed by change instead of delivery. So inside of this Tuesday candlestick, there's this change instead of delivery for the week and for the month as well, making the high of the month. And then price traded lower and traded lower. If you entered here and you are stopped out, you could enter again. I think it's completely viable to enter again, because everything was indicating for low prices, and you could now, especially with that classic Tuesday after the week, you could be a pretty well and a pretty good entry. On the 12 hour, And I'm not sure if it's oh damn, almost perfect the discount, the equilibrium. So we can see that after this week one I has taken, look at what candlesticks are doing. Very small candlesticks showing accumulation above the monthly, above the monthly open, above the week two open, above an week one high at a key level, and that's where price reversed and then expanded, trading lower. And there's that idea, if indeed this was a retracement, a quick retracement to then expand on the upside, then the range low was not going to be taken, and this internal range, this short-term low, intermediate low in this case, was going to be turtle soup, then continue on the upside. And that's the 22 model. It's to after it's to basically have a low hanging fruit on discount instead of expecting the best hanging fruit in that sense. So in the 8-hour chart, we can see that's Friday, right? This was Thursday, making the Thursday eye of the week for week one, followed by lower prices, three down close candles. Price traded into it before going lower, created this intermittent low, which so you can see expansion, retracement, expansion. So my idea of expansion reversal was indeed an expansion, retracement, expansion to now make the real reversal. And you can see that on this Tuesday, 1 hour, 8-hour candlestick, we created this up close candle into this week one eye, this buy side pull, making this eye of the month, eye of the week, eye of the day, closing below it, and then CPI. This was Wednesday CPI price trading into this weekly, if I'm not, yeah, or monthly, yeah, this daily, sorry, daily order block before going lower. On the 4 hour, to not make this boring, we can see, yeah, this was basically a fake move, early entry for people to enter here, be happy and be greedy, enter more, stopping those out, and then really going lower ahead of CPI. So CPI in this case, we can see that Tuesday, big up close candle, creating that order block and price after this order block. Look at this accumulation below it, showcasing the willingness to not trade higher and to trade lower, with everything from time, from monthly open, weekly open, daily open, CPI big candle lower. And notice this. This is the a very how's it called? Blue bread butter? I think not bread butter. I think it's bread butter trade, which is close to a drawn liquidity, especially a nighttime frame. This was a weekly. We can see that we have a 4 hour fair value gap, right? A CB low, which is a range. So range low, range high, then range low, trend low. So price trading into this previous week low, this week one low, below this round liquidity right here. Then trade R into the 4 hour high, 4 hour CB. It's a 4 hour. This CB low is a 4 hour CBI to induce everyone thinking that this was a real breakout, making this Thursday high, trading lower, and then Friday expanding on the downside lower into also this drawn liquidity right here and another drawn liquidity. And you can also use Fibs. So from here to here, we can define some, because this is the manipulation move before the reversal, and you can define some potential drawn liquidities right here. That we can also use this from here to here. You can see that price, which gravitates to those points after the manipulation, right? Because this is a manipulation move. Same thing right here, small candles trading lower into discount, fake OTE, fake OTE to then create a retracement and then price trade lower. Same thing here. This idea of like a fake OT, fake discounts, then continue on the upside before trading into a premium, then going lower. And I think that's everything for the week. I think it was fast and clear, and I have other tasks to catch to. Here you can see that order block trading into the week 1 high at that key level after the week 1 high being made. So same thing here on week 1 high, trading lower, pricing close inside of it, showing that it's willing to trade into the high. Buy side taken, 3 candle model, right here, order block, price retracing into this fair value gap, not even willing to move into cost encroachment. Before CPI at 7, price makes the high of the day. 8 CPI before a big down close movement on downside into the internal range liquidity, which was the Friday low of the week 1, and then into the week 1 low in its sense. So yeah, I think that's it.